economics and financial foresight strategies. To understand Bitcoin, we must go back to 2008, the year global financial system cracked. Bank collapse, government printed trillions of dollars. Millions of people lost their savings, jobs and homes, while the very bank that caused the crisis were rescued. That moment exposed one harsh truth: money was controlled by few powerful institutions.
We're down over 16%.
Dow at the same time has fallen about 18%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Two-year note yields went from 190 to 166 in the blink of an eye.
The NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
And we're not getting the bid wanted. We're not getting the stop trading, and we see where the buyers are. We're just every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
The birth of Bitcoin. In October 2008, an unknown person or group using the name Satoshi Nakamoto released a paper titled Bitcoin Peer-to-Peer Electronic Cash System. It proposed something radical. In January 2009, the first Bitcoin block, called the Genesis block, was mined. Hidden inside, it was a message: Chancellor on a brink of second bailout for banks. This was not just technology, it was a statement against existing financial system. But Bitcoin really is. Bitcoin is not a company, not a country's currency, and not controlled by any government. Bitcoin runs on blockchain technology, a public digital ledger maintained by thousands of computers worldwide. Transactions are verified by miners, and once recorded, they cannot be changed. Most importantly, only 21 million Bitcoin will ever exist. No printing, no manipulation, just pure mathematical scarcity. Early days and price explosion. In the early days, Bitcoin was almost worthless. In 2010, someone brought 2 pizza for 10,000 Bitcoin. A purchase now worth billions of dollars. Slowly, Bitcoin gained attention, first from cyberpunks, then tech enthusiasts, then investors, and finally institutions. 2010, Bitcoin was 40 cents. By 2017, Bitcoin crossed $20,000 mark. By 2021, it reaches nearly 69,000. By 2024, it was nearly $1 lakh mark. Bitcoin had evolved from an experiment into global financial asset. How Bitcoin is traded? Today, Bitcoin is traded just like stocks, gold, or forex, but digitally. Crypto exchanges. People buy and sell Bitcoin on platforms like Binance, Coinbase, and Kraken. Trading pairs such as Bitcoin USD, spot trading. Traders buy Bitcoin at market price, hold it and sell it. When price rise, the classical buy low and sell high strategy. Futures and derivatives. Some traders don't own Bitcoin at all. They simply bet on price movement, going long if prices rise, or short if prices fall. High risk, high reward. 2-peer trading. In many countries, people buy Bitcoin directly from other individuals with no bank involved, making Bitcoin truly borderless. Bitcoin in India. In India, Bitcoin is illegal to trade and hold, but it is not legal tender. In 2020, the Supreme Court lifted banking restrictions, allowing crypto exchanges to operate. Today, Bitcoin is classified as a virtual digital asset. Indian trade Bitcoin through KYC compliant exchanges like Coinbase, Wajirex, and ZipPay, using rupees via UPI or bank transfer. Dominates in India, while derivative trading is limited on domestic exchanges, taxation and regulation. Bitcoin profit in India are taxed at 30% with additional 1% TDS on every transaction. This cannot be offset against other income. These strict rules show one thing clearly: Bitcoin trading is legal but closely monitored. So here is the timeline for Bitcoin. In 2009, Bitcoin network launches. In 2011, Mt. Gox rises. Bitcoin hit $1 mark. In 2013, banking crisis driven Bitcoin above $1,000. In 2014, Mt. Gox collapses, triggering major crash. In 2016, secure exchange. In 2018, crypto winter wipe out speculation. In 2020, institutions begin serious trading. In 2022, market reset. In 2023-2024, Bitcoin become global micro asset. In 2009, network law. Bitcoin become operational with mining of the Genesis block. Early users mine and transfer Bitcoin directly through peer-to-peer transaction. There were no exchange or market prices. Gained its first real price when it was used by two pizzas. First exchange, bitcoinmarket.com launched, enabling Bitcoin to dollar trading. This marked the birth of Bitcoin trading. 2011, exchanges expand. Bitcoin reached $1 for the first time, drawing attention from traders. New exchanges like Mt. Gox emerged, quickly becoming dominant. Bitcoin trading volume increased, volatility rose. Global trading boom. Bitcoin trading surged during Cyprus banking crisis as demand spiked. Major exchanges like Bitstamp and BitsChina gained prominence. Bitcoin crossed $1,000 and global trading volume increased sharply, putting Bitcoin on the radar of regulator and financial media. 2014 exchange collapse. Mt. Gox handling most Bitcoin trades at that time collapsed. After massive hack, trading confidence dropped sharply, prices crashed, and market entered bear phase. In 2014, Mt. Gox revealed that about 850,000 Bitcoin had been lost or stolen due to long-term security failures and poor management. Trading was halted and the exchange filed for bankruptcy. 2016 mature exchange ecosystem. Bitcoin second, having reduced the new supply, while more secure exchanges like Coinbase, Kraken, Bitfinex expanded globally. Trading became more structured with better custody, compliance, and flat on ramp. 2018 derivative and crypto winter. After speculative excess, Bitcoin prices crashed. Despite this, future and margin trading expanded on exchanges like Binance and Bitcoin. Professional trading tool improved, and even as the broader market suffered a deep and prolonged downturn. 2020 institutional trading begins. Bitcoin third, having coincided with massive global stimulus. Institutional grade platform. OTC desk and custody services expanded. Hedge fund and asset manager began trading Bitcoin seriously, viewing it as a hedge against inflation and currency debasement. 2022 market reset. Rising interest rate and major exchange failure reduced leverage and trading. Prices collapsed, but derivative market remain active. Stronger exchanges survive, leading to improved regulation, risk management, and more disciplined trading practices. 2024 fully integrated market. Bitcoin entered its fourth half cycle as a globally traded micro asset. It now trades 24/7 across spot, future, and option market alongside gold and equity. Bitcoin began as a response to broke system. Today it trades across global desk, market, and portfolio. See it as a future of money, our most disruptive financial experiment ever. Bitcoin has already changed the world.